Good morning, beautiful black people. Today we're talking about how to make volatility or the ups and downs in the market pay you dividends in your wallet. So today Jimmy has a wonderful presentation on how options traders can use volatility to increase their profits. What's up, fellas? How y'all doing today?
I'm here this morning, man. So I'm blessed
Yeah.
and highly favored, man.
I'm living with Vida Local.
I heard that. Hey, man, I'm a little rusty. I'm feeling like I missed y'all. These last couple of days I've been out.
Hey, listen, man. Family comes first, man. So when you said I gotta take care of this, I said, look, man, we gotta live our raps, man. When we talk about black wealth or black love, man, like some things come before work.
Absolutely. I agree. What's up, Corey? How you doing?
Man, I'm out here. I was with the fam also. What I mean, with the wife and chilling out. We was seeing some destinations around the city and her visiting her family here, and what I mean. So it was a good time, man.
Any spots that stuck out to you, destination wise?
Nah, same stuff. Like, we do the same stuff. Yeah, we do the same stuff. So
I ain't mad at that either, though.
Yeah.
Huh?
I said I'm not mad at that either, though.
Yeah, like because when you got limited time, it ain't time to be trying nothing fancy and new. Yeah, gotcha. Experimenting is bad when you when you want a limited time frame, especially when you're trying to see everybody in one little, one fell swoop.
Right.
So yeah, we just went right. So nothing stood out. Like what stood out is that those same places are still good to us. So that's what stood out. So,
yeah. There you go.
All right, I see the pews of the church are starting to fill up. Money church is about to begin.
Yes. That's man. Listen, man. I'm excited, man. Get to see you brothers again, man, so we could build and have a conversation about the things that we love to conversate about, man. Yep. Carlos, what's up, Carlos? Nicole's in the building too. What's up, y'all?
Yeah, what up, y'all?
Yeah, appreciate y'all pulling up.
Happy Sunday.
Happy Sunday. Absolutely, man.
Jabbar's in the building. What up?
Jabbar, hey, by the way, Jabbar, I just got your text message, man. I ain't forget about you. Jabbar doing big things, man. I saw him you sent me a message yesterday. My man was on a panel or some sort of big time event. Us poor folks couldn't afford to be there, but he was there on a panel. So Hey, Bar, real quick though, that property you sent me this morning, is it on lockbox and can I go by today? That's all I want to know. Just put it in the chat and I'll see if I can get over there today. But that being said, though, definitely some stuff to talk about in terms of the class and whatnot. I want to bring this class back because I think this is it's important somewhat for us traders. I was, by the way, shout out to Dina because Dina's still been holding it down. You know what I'm saying? POP. Ari said yes. All right, cool. That's the bet. POP hold it down. But Dina was holding down the trading, and I jumped back in the mix this week. You know what I'm saying? Smack SPY up. I put hands and feet on SPY. You know what I mean? I'm trying something new, Core. I move my percentages down in terms of my take profit and where I'm jumping out. So I'm working with like 21 and 15 now. It's a little small. It's a small window, but it is what it is, man. I get 21%. I'm out of here.
Okay, I like that.
You was at about 30 before, right?
It was at 30. I moved it down to 21 in honor of Satoshi Nakamoto. Hold up. Oh, bro, I got it, bro. I appreciate that. I got the lockbox. Anyway, yeah, we talking real estate and stocks at the same time. That's how we do. But
talking money. That's all it is.
But no, so yeah, so at 21%, I'm taking profit, man. You know what I'm saying? So because what I'm doing now, just using the math, right? I'm risking about on a day. I'm not talking about my swings or my leaps. I'm talking about strictly me and SPY rumbling every day, right? So I'm putting about $1,000 at risk on a daily basis. So my thing is, if I hit 21, then I'm making $210 a day, right? $210 in a day is almost what some people get on one rental. Everything to me, it goes back to real estate. So it's like one rental property. I know people that get $200 cash flow. It's like, yo, if I could do that in a day, you know what I mean? Why do anything else? But so yeah, I'm looking to get $210 for every $1,000 that I place at risk. Now, but if I lose, I could lose $1.50. But as long as I'm winning more than I'm losing, you know what I'm saying? So if I win on Monday 210, say I lose $1.50 on Tuesday, that's still $60 profit. So the idea is just to be right more than I'm wrong. And sometimes, well, first of all, I'm never wrong. I'm just early. You know what I'm saying? Shout out to Dr. Chaz for that one. But so that's my new thing. It used to be 30-20. It was a bigger spread there, 30-20. But I'm doing 21-15 now. That's where I'm at, and I'm testing this out because
What up, Mia?
I love doing just setting my thing and not having to sit there and watch a chart. You know what I mean? And by doing that, and if for those that are in the village that saw me trade this week, when I took the 21% the one day, I did 30 one day. I actually did 50 another day, but then I started going to the 21. But the 21, when y'all saw that, y'all saw how I showed it. I showed it a little bit different than I normally do. And the reason I showed it that way is because I did that on my phone. I set it. I put my take profit and my stop loss in, and then I walked away. So then by the time I came back, it was, came back 15 minutes later.
21. Can you do something for me? Now you got that in my head. Pause.
Yeah, man. So that's what it is, man. JT's in the building. What's up, JT Coin Rings? Nia, hey Nia. So we got our folks here, man. Kumar, whenever you're ready, bro, I'll jump into I'll get into the start doing the knowledge and whatnot. You know what I'm saying?
Go ahead, let's hit it.
All right, that's what she said. All right, real quick.
Lord.
Get my slideshow ready. I got a couple things too. After I go through this quick slideshow, I'm gonna share. It's not even really a secret, but I know that most people don't know it because when I brought it up a couple weeks ago, people said, "What are you talking about?" But I'm gonna share with you how to do exactly what I was talking about, which is to follow a specific trade and not necessarily a ticker. I'm gonna show you that in a second. You know what I'm saying? But let's go. All right, and shout out to everybody in the village, because if you're in the village, the PowerPoint presentation, that part of it is always stripped out and put into the intro to options section. You know what I mean? So you have the full actual show of today's show, Sunday Money Church, as Kamar likes to call it. You know what I mean? But just this portion when we put into the intro to options. So if you're not in the village, make sure to go to blackwealthrebels.com, because even outside of this, we have a lot of content. And our content runs the gamut from us doing a lot of things about taxes, about real estate, about all kinds of things in the financial world. But we also do things like talk about movies, music, and culture. So we do a little bit of everything within the village. We try to make it entertaining, but also informative. It's a form of edutainment, for lack of a better term. But today we're going to talk about volatility in options trading, right? We're going to explore how volatility shapes your trades and impacts your profits. So you have to understand volatility and pay attention to volatility. And we're going to start by talking about what exactly is volatility. So it's a measure of how much an asset's price fluctuates over time. Specifically, we're talking about options now. We're talking about options contract. And it does have an impact on your premium. Your premium is what you pay for the right to control those shares, right? Every contract you control 100 shares. And there's a premium to purchase that contract. And the volatility directly affects the price and the potential profitability. So if you are in this to make profit, and if you're not, why are you here? You should definitely pay attention to volatility. I also want to say that anything that I say here is for informational and educational purposes only. This is not investment advice. Myself, Kamari, nor Corey are telling you to buy anything. We are not your fiduciaries. We simply talk about what we do and just share that information. So it's for educational, informational purposes only. But there's two types of volatility I want to talk about. One is a historic volatility. So that measures past price movements. When you see people who do a lot of charting, what they're looking at are past price movements, whether they're looking at a daily candle, monthly candle, weekly candle, and people use different time frames to do their technical analysis. But what they're essentially looking at are past price movements, right? So that's what's called historic volatility. But there's also what's called implied volatility, and you'll also hear it mentioned as IV at times, right? So implied volatility, it tries to predict future price movement potential, right? Not future price movement, but the potential, right? Keep the word potential in mind. But IV is important. So we're going to talk about historic as well as implied volatility. But volatility in itself is something that you should actually understand and just be aware of as an options trader. And as I start with every course that we talk about options, and I'm going to continuously do so, even if it sounds counterintuitive and it makes no sense for our business, I'm going to tell you that most people should not trade options. Again, I repeat, 95% of people should just leave options alone. I don't care what people tell you on Instagram or Twitter or all the social medias. And the reason I say that is because, as I'm going to repeat every week when I talk about options, if you don't have the time, energy, or want to put in the effort to study, watch the market, pay attention, then just go buy ETF or mutual fund and just go mind your business and live your life. But if you are in that 5% of people that are willing to put in the time, energy, and effort, to learn, and because this is something that you just don't learn and then walk away from. You have to continuously learn because things change. Believe you me, if you've traded options for a while, things that were working 5 years ago sometimes don't work today. Things that worked 20 years ago sometimes don't work today. There's several strategies that I've been trading options for at least 20 years now. And there's strategies that I used 20 years ago that I would never use today. I mean, in fact, there were strategies that I used literally before the pandemic that I can't use. There were strategies I used during the pandemic that I don't use any longer. Shout out to our brother Pass, man. Pass had a strategy before the Amazon split where we were cashing out every Friday. We called it our paycheck play. That doesn't work anymore because once Amazon split, everything kind of changed. I say all that to say, if you're going to be an options trader, you have to have, time to put into it. And if you're not willing to put that time or don't have the time, don't do it. You know what I'm saying? Just be a long-term investor and mind your business. And it's okay, right? It's okay. It's not for everybody. But understanding volatility is a part of someone that is willing to put in that time. And I'm not saying that it can't be profitable because we know a lot of profitable traders. We also know people that have, lost money trading. And by the way, if anyone tells you that they're successful 100% of the time, as I always say, either they're a liar or they're not telling the truth, and get away from them. They're bad energy because they're liars. Because there's nobody that is successful 100% of the time. Even the equation I was just talking about before we got into this, the PowerPoint, my whole strategy is based on being right more times than wrong during the course of an actual week. During 5 days, I only need to be right 3 out of those 5 days, right? And that's literally my goal. My goal isn't to, obviously I would like to be right 5 times, and I have had streaks, which are all documented in the village, where I've went in weeks, like consecutively being right, but I also got smacked in the face several times. So that's part of the process though. So let's move on. Let's talk about historic volatility, which is past performance again. So it's a backward looking metric. So because it measures actual price movements that have already happened, right? So sometimes say in order to understand what's going to happen in the future, you have to understand history, and that's all cool. But we also know the market is very emotional and things change and life be lifing sometimes. And what I mean by that is things happen in the world that can have an impact on the market that you can't see by looking at past performance. You know what I mean? Wars happen, elections happen, all kinds of things happen. And by looking at past performance, sometimes you can't see how the market will respond to those actions. Natural disasters happen. There's all kinds of things that happen that affect the market. And, looking at older candles sometimes can't, really give you that idea. But it can help sometimes because companies and their valuations tend to fluctuate similarly. Like what I mean by that is you have certain companies that based upon a season will tend to move the same way. And if you study that and you find a pattern, which sometimes you can find, but it all comes to you again, that's why you need time, energy, and effort to then find that pattern. Then looking at past performance can help you, right? But it helps you to understand price swings. So higher historic volatility indicates wilder past price swings. Companies like Tesla have high volatility and continuously have high volatility, which goes to supply and demand, which we'll talk about in a second. But again, like I said, patterns or trends is useful for spotting patterns, but it doesn't predict future price movements. But you can spot patterns at times, right? There used to be a play we used to make back in the day, Corvin, remember this? Where we used to trade Six Flags, right? Right before the weather break, it would be a spike, and we would trade Six Flags. And then when the weather broke, and the summertime happens, and people are in Six Flags, the price would go up, and we would already be positioned. I don't even know if that works any longer, but we used to do that back in the day. Anyway, so if you want to think about the historic volatility, one way to look at it is like looking at a highlight reel, right? It can't predict what's going to happen in the future, but it's good to look at the highlights to see some of the patterns and trends, right? So if I'm studying a player and I'm watching their highlight reel, what I'm looking for are some of the things that they tend to go to, some of the moves they tend to make. I'm looking at their highlight reel to pick up on maybe patterns or trends in their game if I'm trying to defend a player, to give a sports analogy. It doesn't mean that they haven't added anything to their game. Doesn't mean that they haven't changed their game. It just means that this is with past, and sometimes the past tends to, happen again. So it's good to look at historic volatility, but to always understand that it's not, sometimes indicative of what's going to happen in the future, right? None of us have a crystal ball. Maybe Kamari does, but I don't. Maybe Corey does. I don't. But Anywho, let's talk about implied volatility. This is more about forecasting, right? So there's a difference between like forecasting and then looking at past results. So implied volatility is forward looking. So it predicts potential future price movements, right? So the price component is already baked into options premiums. When you talk about IV, it has a direct impact onto what you would pay to take control of those 100 shares through that options contract. So it has a direct impact on that. It's also very event sensitive, right? So what we like to call event sensitivity. So sometimes it spikes before earnings reports and major news. So implied volatility, this is why you have to really have time to pay attention to what's going on, specifically if you're trading something that has the ability to move based upon events, right? So there's always catalysts for movements. So when the whole wave of AI came into place, you saw that was a catalyst for, say, NVIDIA or Microsoft to have crazy spikes. But sometimes what happens, right, you get what's called an IV crush, right? So that's implied volatility crush. And that's when the volatility tanks after events. And that drains premium value, which means you have the ability to lose a lot of money. So let's just say we're leading into an event. And I'm just going to make something up. I'm not giving it a real example. Let's just say that there's a new video game coming out and the company is traded publicly. And everybody believes this game is going to be the next coming of whatever it may be. And then, you know, they give the announcement of that game, and it's not what people believe. But leading into that, you could have had a lot of implied volatility because people believe one thing is going to happen, right? People want it to be one way, but sometimes it's the other way. So what will happen is if they don't get the news that they want, everything goes on a sell-off. This really just goes into supply and demand, right? If there's a demand for something, right, and there's limited supply, price goes up. So this just goes back to, like, you know, the basics of business that you may have learned in school if you ever took any sort of business classes in college, with supply and demand, that curve of supply and demand. So what tends to happen is now if no one wants that, there's no demand. What happens when there's no demand? Right? So this is kind of what IV crush is really about. It's like that implied volatility will drain after an event. So you got to be careful. You have to be careful when you do that. People do this with earnings all the time, right? They say, I'm going to trade earnings. And if the earnings don't go the way that you want them to go, you can lose a lot of money in a short period of time. Now, if you're on the right side of this, you can make money in that short period of time, but just be careful when you do something like trade earnings or trade any sort of event, because IV crush can hurt you. It can really, really hurt you. So that's something to be, you know, really pay attention to. It really just goes back to supply and demand, right? If there's a demand, right, and there's a lack of supply, price will go up. You know, so if there's a huge amount of supply and there's no demand, inverse. Anyway, anything you gentlemen want to add to that, Kamari, Corey?
No, I was going to say, you mean to tell me economics matters in options trading?
Economics matters in life.
And also,
That's a shirt, by the way.
I know. I was sitting there thinking that too. Like, that's a fire T-shirt, a hoodie. But I'm sorry, Corey. Go ahead. What's that?
No, what I was saying is your volume is basically everything in options, because that's what is the price movement. Volume in and out is the price movement.
Yeah.
Buyers coming in and buyers coming out. Your biggest buyers always going to be institutional buyers. Very, very, and I mean absolutely very, very rarely does your normal average person, people, move the market. All of your volume comes from institutions mostly. Like 90% of your volume. So,
or you mean we shouldn't bother with meme stocks?
So that's kind of But
what I'm trying to say is, watch what institutions do, right? So do not get caught up in what you see people doing. Watch what the institutions do, because that's where all the volume is coming from, in and out of these stocks. Now, like I said, that one instance where they did GameStop, that was because, and then you see what the institutions did with that. They just did. So you understand that when people tried to take over and use and try to make money off of one stock, they literally stopped the stock. They stopped the sale of it, and because people on the other side, when you make money from an option, somebody on the other side is losing money, and so they would not get put out of business. Because the thing is, GameStop almost put a couple of the platforms out of business. they literally almost put them out of business because people were running it and not institutions where they could see where the volume was coming from. So that's how important volume is.
Yeah, I was just going to add to that a couple things, right? So that is where the volume comes from for the most part, but it's also something to think about, right? These institutions are still run by people, but the thing is they have access to different information, right? So a lot of times you can just watch what they do, follow what they do, follow their patterns specifically, and you can make money. It's funny, right? Because we joke about the politicians and their trading, right, and how they insider trade. But I was looking at something the other day, and I didn't vet the information, but I saw it on Twitter, and I saw a couple of people talk about it. Like literally just following their trades, you would have been profitable, even though you get them after the fact. It's like sometimes the information is in front of us, but the one thing about the market, why there's always going to be money in the market, is because human nature. People tend to think they're smarter than what they really are, right? And Corey made an excellent point. On every trade, there's always the other side of that. Someone's making money, but every time you make money, guess what? Someone's losing money on the other side of that. But the fact is, all of us believe that we're smarter than we really are. And what happens is it's always going to be money in the market. Somebody's always going to be liquidity. It's the reason why sports betting is what it is. You know what I'm saying? There's literally sayings like, yo, the house always wins and this, that, and the third. But casinos still make money every day. Every day. You know what I'm saying? Like if you own a casino and you bankrupt a casino, I don't know how great of a business person you got to be. Never mind. Y'all ain't get that. Some people got that. Anyway, why volatility drives premiums, right? So high volatility equals high premiums and low volatility equals low premiums, right? So
Hold on, Joe.
Yes, sir.
Acknowledge this real quick. Thank you, JT.
JT, salute.
For the $4.99 super chat. Thank you, brother. Thank you. Appreciate you.
Salute. All right, so high volatility, right, is more potential price movement that creates greater profits. Option sellers demand higher compensation for increased risk. They're taking more risk, so they want to be compensated higher for the premiums. We're going to get to that in a second. All right, so buyers pay more for the greater profit potential. So they're willing to pay more for that contract because there's a higher profit potential. It's the reason why when you buy things that have intrinsic value, where you buy in the money, you're going to pay more generally for that premium because there's greater profit potential by you buying a contract in the money, right? So the way to think of it is like betting odds. Chaotic market creates bigger payouts. That's the funny thing, right? So as the market has been like tanking over the last several weeks, since the new administration came in or what have you, there's people that I see complaining about that. But then all of the people that I know that are in the options game, they love it because they're making money, even like, running puts or doing this, like all sorts of advanced strategies, because it's a chaotic market. It's really a chaotic market. The other day, I think it was Thursday or Friday, like it was down like 6-7 points, like to start the day. And then it which left a matter of fact, I put it in a village. I was talking about it. I was like, yo, it's Friday. It was like, yo, it's a huge gap. It gapped way down, which means that once it gaps way down, that gap is going to get filled eventually, like maybe not in the same day, but it started moving up that way. So there's all sorts of potential to make money if you're an options trader when the market is chaotic, and that tends to lead to higher premiums, but you're paying higher premiums because there's a greater profit potential. Now, what some people do, right, on the opposite side of that is they want low premiums. So what they'll do is they'll go buy something way out of the money. You know what I'm saying? A stock will be trading for $100 and they're buying like $250 calls on that. And it's like, the odds are not in your favor. The odds are just not in your favor. But what they're looking to do is get a lower premium. So low volatility equals low premiums, right? It's a minimal price movement, means limited profit potential, right? So when you buy way out of the money, it's limited profit potential. And option sellers accept lower premiums in stable markets, and buyers pay less due to reduced opportunity. It's kind of the opposite of the high volatility. Now, putting these two things together, if you are able to buy something way out of the money and things starts to move towards that number, even though you bought it out of the money, now you're going to make a lot of chicken, right? So this sounds very simple, but it's very difficult to do. The strategy should be to buy low premiums and sell high premiums. It's almost like when people say buy low and sell high, and no one ever really does it, but it's very simple in theory. So the theory is simple, but the execution tends not to be simple. You know how many people, and I even saw some of these quote unquote finfluencers putting up crazy posts over the last couple of weeks. Get out of your entire 401k, sell off your 401k, sell your IRAs. And I'm sitting there like, what?
I hate influencers.
So it's like, as I'm watching this and I'm reading this, I'm like, this is literally the opposite of buy low, sell high. You want people to sell when everything's going down, when it's actually the opposite of what you should be doing, right? But the same thing happens in options, right? You're supposed to buy low premiums and sell high premiums. That's how you make your money. But it sounds good in theory, but it's difficult to do. All right. So let's move on. Volatility's impact on options decay. We talked about theta last week. So this is why I built upon theta, right? Theta is how your options lose value over time. So if you have high volatility, slow premiums, as a slow premium decay rate, low volatility accelerates premium, right? Evaporation. And there's different strategies that you can use when you understand how volatility works. And again, these different classes that we have on options on a Sunday, some of them seem like more of a long-term buy and hold. Some of them seem like a short-term class, but they all work together in conjunction with each other. That's why we separate the PowerPoints and put them into the intro to options back in the village. The reason we do it is because you can't just take one in a vacuum. They all work together. So if you watch last week's theta, this kind of works with that as well in terms of understanding volatility, right? So like I just said, sell options when IV is high to collect inflated premiums. That should be the overall goal of your selling strategy. But again, it's easier said in theory than it actually happens in practice, which is why most people should not even look at options. That's why I keep saying it, because if you don't have time to understand that, leave it alone, because what you're doing is we're buying and selling premium here. I mean, unless you want to execute the actual option, which most of the time we don't. We're just looking to play price action and make money, and by playing price action. Now, with that being said, here's some different strategies. And we'll build upon this just to add some things to your vocabulary. You can run iron condors for wide price swings. Straddles and strangles are another one. Credit spreads. Shout out to my brother Spoon. That's kind of what he does, like day in and day out. He loves credit spreads. That's for high volatility. Those are the strategies you want to look for if you want to play that. Now, if you want to play low volatility.
So credit spreads. We talking like credit cards?
No. We're going to do a whole class on credit spreads, probably straddles and strangles, as well as iron condor. So I'm not going to go too deep into it, Pauls. But
yeah, that sounds like a zoo class.
No. But this is the thing. The thing about options trading is it's its own world. You can go. I like to keep things simple. So when you guys see me trade, I keep things simple. I understand how the entire game works, and I've tried a little bit of everything. But what I realize is you can't be all over the place, right? You can't be someone that does. Some people will tell you they do it, and that's fine. But even at institutions, when you go to institutions, they don't have one person doing all the things. They'll have different departments or different people that are responsible for just really specializing in one thing. So for you to think that you as a retail investor are going to be doing iron condors, covered calls, debit spreads, straddles, it's too much to pay attention to. It's too much going on outside of the fact that you have life, you got to sleep, you got to eat. You know what I'm saying? You got family. Like, you can't be doing all that. When you look at institutions and how they separate out their work, what makes you think you can do more than that? We're talking about billion-dollar entities.
If billionaires are doing it, why can't you?
But I hate, oh man, you about to make me throw my whole computer, man. You about to make me throw my whole computer. I hate that logic. I'm sorry. Kamar is triggering me on purpose. But anyway. So on a low volatility strategy, you can look at calendar spreads, debit spreads, and cover calls. Cover calls are an excellent way to make money for my real estate people, because it kind of like mirrors the way of renting property, where you're on the other side of that, where you're selling the contract. So cover call is something that we definitely going to spend more time with moving. Again, we do this every Sunday, so we'll move forward and create classes around that. But so here's some volatility traps to avoid, right? Ignoring implied volatility rank. You can't ignore it. People try to ignore certain things that you can't, such as theta, such as delta, and such as implied volatility. Don't do it. Overpaying during volatility spikes. Don't do it, right? Because then when things shift, you're going to lose all of that premium, right? And forgetting about the impact of implied volatility, right? So you don't want to forget about the impact. Now, mastering the volatility game. So you can use IV rank. For those that use TradingView, there's all sorts of metrics you can use, but you can use IV rank to identify overpriced and underpriced options. You can track catalysts earnings reports, Fed meetings. The Fed was talking this past week. I get out of the way of a lot of catalysts because, spikes are crazy. And I'm not trying to get caught on the wrong end of that, right? Pause. All right, so time your trades. Sell options when IV is high, buy when IV is low. That's another way if you understand both sides of it. Master volatility. So you transform volatility from a threat to your advantage. Knowing how all of these things work, you can use it as an advantage because sometimes these come across as negative. When we talk about theta, when we talk about delta, when we talk about IV, they come off as a negative thing. But if you understand how they work, all you do is flip that and use it to your advantage. You really use it to your advantage. If you know that there's going to be a catalyst and things will move a certain way based upon your research, then you can use that to your advantage, right?
So, Jimmy, do me a favor. Spend 30 seconds on talking about what a catalyst is and specifically what a volatility catalyst is.
So a catalyst, the most known catalyst a lot of times are earnings reports. So most companies report earnings quarterly. And this is why the whole idea of targets losing money because of the boycott is funny, because we really haven't even had a quarterly earnings report yet to see what the actual impact of these quote unquote boycotts are. Because that's the number one catalyst is that people are familiar with, which is earnings. So when a company has earnings, it can go one or two ways, or actually three ways. It can also perform sideways, but generally speaking, it's going to outperform or underperform or perform right on a key as predicted by most analysts of that stock. So what tends to happen is if the analysts predict that it's going to perform at a certain level and it extremely overperforms that, most people believe that should make the value of the company rise, which will then make the value of that contract rise. Doesn't always work out that way because the thing about earnings reports is you get a lot of information outside of just earnings. So
and they're very subjective.
Exactly. So if you have an earnings report and they say, okay, we were predicted to make 2 billion, we made 4 billion, right? You say, oh, the stock should go up. But then in the middle of me telling you that we made 4 billion, but the future looks bleak, we may not make $1 billion again, right? So sometimes there's other bars that are mentioned during those earnings reports that can also have an impact on the movement of that price. But that's the number one catalyst that people know. So if you have a good beat on a company because you've been following how their products or services are operating and you believe they're going to perform well, that can be a catalyst for you to take advantage of. And, you can look at that volatility within that company and see, okay, so this is the volatility now. Once they actually give their earnings, this is going to shoot through the roof. Then, you can, and this comes from study. This is why a lot of great options traders only trade a couple companies because they spend all their time studying those companies and understanding how to operate those companies. So shout out to my brother, Jake Johnson, who had a group Discover Your Options. And what some people would do is they would trade exclusively Microsoft. And some people only made 4 trades a year, which was during earnings. But they made a lot of money because they studied that one company and knew the ins and outs of that one company. So,
and I mean, not just options, right? Even just regular stock traders, a lot of times just focus on a couple of names. That's their defined universe.
Yes. So I try to do that too, which is why on my actual day in and day out rumbles, I only trade SPY day to day. I don't do anything else on an intraday basis. I do other things on swings that we talk about in the village when we talk about we're looking at this week. I do other things like that on swings and specifically leaps, but day in and day out, I'm just trading SPY. That's all I got time for. Me and SPY, we ops and we go at it pretty much every day. We rumble, so that's what it is. But anyway, so that's a little bit about volatility. I'm going to take this part, put it in the village under the intro to options, so you can rewatch it as many times as you want to. But volatility is very important when it comes to trading options and understanding premium and getting paid off of said premium. And for those that aren't in the village, go to blackwealthrebels.com and join the village, and you'll see us in there trading. Because the traded chat, I think, is open to everybody. I think that's open to everybody. But those that are have at different tiers get different access to different information, such as when we talk about the swing trades, that is, I think that's only part of the paid tiers. But, the free tiers get access to all kinds of other stuff as well. With that being said, anything that you guys want to add before we get away from this presentation and talk about some other stuff? Because I do got one more thing I want to share.
No, just understand volatility, understanding how timing impacts volatility. And do the knowledge, as Jimmy always says.
Do the knowledge. Corey, anything you want to say, beloved? I see you back in the trap. What you want to say, boy?
Man, just lifestyle design is important, man. Like, to be honest, I only got swings going, and then I really started to buy some different stuff in my portfolio, because I'm changing my portfolio into an income portfolio. And so I started to buy some things to replace my income, instead of me buying longer term holds, because I'm looking for a shorter term strategy to replace income. So I'm changing my portfolio around because of the way everything is being set up, and I'm seeing the market how I'm seeing it. I'm changing my income over. I'm changing my portfolio right now to fit my lifestyle design and not worry about what is going on in the market. So I won't be doing any trading unless it's leaps or swings like 6 months out.
Now,
so
statistically speaking, though, and we could talk about this in a whole other show, that's something to think about, because when the market is beat up like this, is it the best time to be building a income portfolio, or is it the best time to build something that has the potential?
So for me, it is because because I understand the market, and I'm doing my own personal research. So that's for me, yes. But
So
for
I'm gonna give you my logic. I'm just basing it on data, right? So the data says that times like this is the best time to actually not build an income portfolio per se, because like any income that you would make between, say, let's just say now in 4 years, say now 3 years, whatever it may be, it will be much higher if you position yourself within certain things that are growth, even including that income. But we could talk about this another. That's actually another, and I'm gonna bring the down.
I'm not disputing that, man. But again, lifestyle design. So
I know. Here's what I said. But
I'm factoring in lifestyle design and the math. So your math is not wrong. I'm not saying your math is wrong, but I'm also factoring in lifestyle design to go with that math.
Yeah, because the only reason I bring that up is because I think that and I want to do it in a different show. The reason I want to do that is because I want to show it with like research and data, and not just me saying.
And listen, again, I'm not disputing the math that you're talking about. This is not me disputing the math, because I understand that math. But again, we're talking about lifestyle design on top of math.
I get that, but that's what I'm speaking about too. Because even with lifestyle design, right? And again, that's why I said we do a different show. Because even with lifestyle design, wouldn't it be easier to say like DCA into things that'll have like the bigger growth potential, as opposed to having to take the time and energy to figure out those income?
Not for what I'm trying to do. No.
A lot of income.
All right, let's do this, y'all. Let's save that for another show.
A lot of income plays in the market too, because there are income plays tend to devalue the actual underlying asset because they're trying to kick off income.
Hold on, y'all. Hold on. Let's say this for another show.
Two different things.
Let's save this for another show, y'all.
All right, we can do that. So I want to answer Brandon Leslie's question.
And don't forget about Marquis. So Marquis, we got
Marquis' question too. All right, so Brandon, so what do y'all prefer, swing trades or leap trades? My number one will be leaps. My favorite is leaps. In fact, and I've talked about this ad nauseum, and people are gonna get tired. Like, here you about to go with this damn book again. The best book. Drop my K. The best book on leaps though is this right here. It's Intrinsic. It's written by Nancy Pelosi. It's called Intrinsic. It's actually not written by Nancy Pelosi.
It's written by her husband.
It's written by a guy named Mike Wynn. That's his name right there, right? But I haven't been able to find a digital footprint on Duke, so I'm just assuming that it's Nancy Pelosi, because what I see her doing in the market is what he talks about. But so leaps and using the strategies incorporated in here would be my favorite. Now, that's my longer term plays where I look to make the most amount of capital. But I enjoy rumbling SPY day in and day out. You know what I'm saying? Because I look at SPY as being my way to replace like certain rental income. But although I still try to operate in the rental market. But so my favorite though overall will be leaps. If you're asking me to pick one, it will be leaps, followed by zero DTE SPY trading. And I've been reading lately, so I'm reading research now about the logic and whether zero DTE actually makes more sense than leap. So I like to read information that kind of backs up my hypothesis, but I also like to read things that go completely against what I tend to believe, just to see if I can pick up anything or if there's any like flaws in my logic. So I even do that. I talk about this often with Bitcoin. I'm such a Bitcoiner. You know what I'm saying? I believe in, stacking sats, like it says on my shirt. But I often read, I probably spend more time reading anti-Bitcoin literature than I do pro-Bitcoin, because that's just where I am. But anyway, Marquia says, where is the line drawn for insider trading that's prosecutable and just knowing the T? It depends upon your complexion. Stop. I mean,
it depends on your level of access also.
Yeah, you know and what you know. Like, because it's really about who you know and what you know, man.
What's your complexion? All right, let me stop.
Because they put Martha Stewart behind bars, but they let everybody else do what Martha Stewart did, and everybody's still walking around. So it ain't even just about complexion.
Somewhat, but Martha was out of pocket too. If you read the actual Martha Stewart thing, she'd been doing it for a while, but she got, sometimes people.
She was drawn, and she said so in her book. She was drawn.
Yeah, but, it's like, it's like we let you get away with a little bit, but now you're doing too much. You know what I'm saying? Like,
yeah.
Now you're trying to embarrass people. So anyway, I say that to say, that's a great question though, right? And that's really subjective. It's really subjective. When them folks want to get you, they get you. You know what I'm saying? Like, I'm laughing at Marquise in the comment. Hold up. She says that I just want to make sure if somebody whisper in my ear to sell, and I do, I ain't going to the pokey.
Again, it depends on what kind of access you got.
Who is that person giving you information? Is that the CEO of the company telling you that?
Right. Or is it the secretary?
You know what I'm saying?
Secretaries could have access to insider trading too.
Listen, man, I have this weird obsession with mafia history, right? Watching documentaries on the mafia history. And the reason I find it weird is for a lot of reasons, because it's like racism baked into it. It's organizational structure of companies baked into it. It's history baked into it. I bring all that up to say it's always funny to me when you watch like one of those docs and you see like the boss like go into retirement, or either going into what they call mafia retirement when they kill him.
Get whacked.
But the person that takes over is like their driver or their like little assistant. Is like he automatically, and it just goes to your point though, Kamari. Sometimes those are the folks that got all the information.
Yeah.
You got a second in command, you got all these soldiers, but somehow your driver becomes the boss because your driver knows where all the bodies are buried. And that's what secretaries and some of those folks are too.
Allegedly, that's how Frank Lucas rose to power.
Frank Lucas he just rebranded himself because that country.
Yeah,
I'm sorry.
I said alleged. That's why I said alleged.
Listen, though, let me get off of that. By the way, in the new season of that is like the Marvel Universe for gangsters, which is Open Up My Window Again. What's the name of the show? Forrest Whitaker. Godfather of Harlem. I called up my window again. That's what started. April, whatever. It comes out in April or whatever, but they showed like some clips from it, and Frank Lucas is in the joint. I was like, how he get a rebrand to be in this? Like, but first of all, like from a historical standpoint, that joint is so far gone. That's why I call it like the Marvel Universe for gangsters, like, because it's just fictitious at this point. But getting back to options trading, which is what we're talking about, and how did I make the analogy between options trading and the mafia? Because that's what we do on Sundays.
That's what you do.
I do. I pontificate. I love it.
Leave me out of it.
That's what life is about. Life is about drawing parallels and pontificating. But anyway, secretaries tend to know where all the bodies are buried. So if a secretary gives you information, be careful with that too. You know what I mean? Listen, I'm a huge fan of the TV show Suits, and for those who don't know who watch Suits,
Mike Ross.
Even about Mike Ross, right? It's about Harvey Specter, but his relationship with Donna, who's his assistant secretary. She knows everything.
Everything.
She knows everything. So if Donna giving you information, that might be problematic, Anyway, little Suits reference for my Suits fans out there. I haven't watched Suits LA yet though, but so I don't know whether it's just as good.
Did that start yet?
Yes, it did.
Okay, I gotta get up on that.
Yeah, yes, it did. So anybody watch Suits LA? If y'all like it, let me know in the chat if any of y'all watched it. Do any of y'all watch Suits in general? Anybody like Suits?
I've been on Suits, man. I watched it when it was out, and then I rewatched it when it came out.
I watched Suits on USA before Netflix rebreathed aired.
I watched it in its entirety when it was out, and then but that was years ago. So I would have to catch up.
But I don't know if anybody watched the LA version.
I watch stuff where people don't die.
Well, a couple people did die.
Yeah, like
not many.
We're not talking about my normal level of violence.
No, it's not violence, it's just death. But what I'll say is this though. If I don't want to give anything away, because some people who are listening to us probably have no idea what we're talking about. If you haven't watched Suits, it's actually on Netflix now. It was a USA show. Take a look at Suits though. I think Suits is dope.
I mean, that's why Meghan Markle got married to the prince.
I mean,
that's a joke. That's a joke. I don't know how they met.
She was on there, you know what I'm saying? Mike Ross was definitely making sweet passion love to Meghan. But anyway, can you put the website link in the chat?
Sure, blackwealthrebels.com.
Are you talking about for the village? By the way, that's a fire picture you got too as your picture.
Yes, it is.
That's a fire picture, Cloud with TJ. I guess he's talking about Black Wealth Rebels.
I mean, that's the only link I'm thinking about.
It's the only website I'll ever think about.
You know
what I'm saying? There we go. There it is, blackwealthrebels.com. So that's about Val. I want to share one more thing too. I might make this its own separate video in the village too, because this is his own thing. It's real. It's gonna be very short.
Okay.
It's gonna be very short. Pause. But I want to share it nonetheless, because I think that it's something that a lot of people. So Cloud with TJ is not necessarily a trading course, but there is so we have what we call the village, right? This will give me a chance to explain what the village is. If you go to blackwealthrebels.com, you can sign up. There's free tiers, there's paid tiers. And the thing about the paid tiers is you get access to more classes. What we're building is a community. It's not necessarily trading courses, because there's courses on everything in there. There's real estate courses, there's stock courses, there's trading courses, but there's also just a content library where we talk about and just give information on our perspective on pretty much anything from politics to books to culture. Is really just a hub for us to build a community to really support each other. Because one of the other things that we want to do for people that are a member of the village, specifically our paid members, if you guys have a product and or service, we need to know about it, because we want to make sure that we are building an ecosystem where everybody supports everybody. So that's what the idea of Black Wealth Rebels really is about. Because when we look at Black wealth, we look at Black wealth different than most people, which is the term, rebel, because most people look at Black wealth as like being able to buy things and do things. And we look at Black wealth as being community, Black love, and just like, building, and by the way, this is why our live events will be what they've been. Shout out to everybody who came to our first live event. We got another live event we're getting ready to put the flyer out for. And also, last but not least, April 5th, we have Saturday school coming for the youth in the community. I say all that to say, join blackwealthrebels.com to stay in tune with everything that we do have going on. But there is options trading back there. We have a whole Options 101 series that is back there at blackwealthrebels.com, specifically for the paid tier. And it's the $14 tier, which is next to nothing. Because here's my thing, right? I gave out a trade this week that would have paid your annual membership for those that, cared to follow. But again, I'm not giving investment advice. I'm just showing you what I do. Are we in Philly? Yes, we are in Philadelphia.
Sir.
Yes, we are in Philadelphia, but we will travel. So where you at? You want us to pull up? We will pull up. We try and do events everywhere. We try and go on tour. With that being said, though, let me share this one thing that can be very powerful for my options traders out there, specifically those of us that use TradingView. I know both of my brothers use TradingView. You know what I'm saying? TradingView. Matter of fact, TradingView just smacked me for my annual membership. I forgot that I had it on auto pay, and they hit me. You know what I mean? I had to, because I don't like to carry debt, so I had my card pay. Hold up, did you put that up, Kamari?
No. You got what you call them.
It's the wrong one.
So remove the slides.
Look, so I tend to keep my credit cards paid off, and I saw this charge on there. I was like, what? I was ready to snap, and it was like, oh, your annual trading view. So they got me. All right, so. I don't know why you put that screen. You shifting the screens, B. What you doing? All right. So here we go. Here's TradingView, right? And this is what I use to do my little bit of. I don't do a lot of technical analysis. I look at one thing, which is my channels here. Here's SPY, and I generally follow SPY on the minute chart. Now, one of the things I'll do is this. If I want to do like a a swing trade. Let's say Microsoft. All right. So now I want to look at Microsoft. MSFT. Most of my swing trades, I don't look at the minute charts. I look at the daily charts. The minute chart is for when I'm with the undesirables in District 12 during day trades. But when I'm with the normal humans looking to make a trade, let's say I'm looking at Microsoft, right? So here's Microsoft right now. We traded at about 391.26. So I say, all right, I want to buy the Microsoft 390 call option, right? Let's just say that again. I'm not telling anybody to do anything. I'm not even saying I'm making this play. I'm just using this as an example. So I want to buy the 390 call, and I want to go out to May. On TradingView, right? If I click where it has the actual ticker symbol, right? And Kamari, this is what I was talking about. You see how it says all stocks, funds, futures, forex. Can you see that pop up?
Yep.
All right, cool. If you go all the way to the end where it says options, and you click on options, right? Then click on Microsoft. It'll give you the actual options chain. So I want to go to the May contracts, May 16th, right? So now I go to May 16th. I said a 390 call. On the left-hand side, you see calls. On the right-hand side, you see puts. In the middle, you see the strike price. If I go to the 390 call, right, which is right here, and I click on the 390 call, what it will bring up on my chart is the price of just that contract. So now I can add this to a watch list just for specific trades that I have. And instead of having to watch Microsoft, I can literally see the value of the contract go up and down. So then I know, like, you know, how I want to bust a move in terms of getting in and out of that contract, right? So this is a way to just follow literally a specific contract. Make sense?
Perfect.
But a lot of people don't know that. So what they tend to do is they tend to just follow the underlying asset and then see what that's doing. But I can follow the specific contract that I'm trading. And by doing that, this allows you to create multiple watch lists, right? So the watch list that I have set up now is just various sectors. That's what I'm looking at now. So the watch list I have is various sectors. But I can change this watch list and add several. I have several different watch lists up there. I have one called current trades. I got sectors, and I got certain companies I watch. But I can create a watch list just for specific contracts that I'm in and then add those contracts by doing that same thing, right? So that's Microsoft. Let's just say you want to trade with something else people like to trade. AAPL, Apple.
Or the Qs.
Right? So here's the Apple options chain. Let's just say I want to buy in the money contract, and let's go as far out as we can. Let's say I want to do a leap, right? I want to go to December, and I want to buy something, you know, far out, and I want to buy in the money, 170. Boom. Now I could just literally follow this. This hasn't even been available that long, but I could just follow this one, and now I'm just following this on added to my watch list. So now I can put my leaps, I could put my day trades, I could put my swing trades, and I could just follow the specific contract and not just the company. Not that you shouldn't follow the company, but I know that I talked about it a couple of weeks ago, and some of the messages I got were, how can you follow a contract and not follow the company? Well, that's how, if you're using TradingView. I'm not sure if this is on a free one, but it wouldn't shock me if this is also on a free tier. Because usually the tiers are really about how many different indicators you can use.
Right.
But, you know, but anyway, this is just a way to follow specific contracts and not companies. So that may help someone. So, you know, if it does help you, God bless. You know, so Kamari, you can follow along, right? Because you were asking me how to do this as well.
Yeah, no, because I didn't know you could do that. So I'm looking at it now.
Yeah.
And I see a lot of value for that. Because I haven't been doing a whole lot of day trades. I plan on doing something very similar to Jimmy. Finding maybe 1, 2, 3 max names I might trade daily, but ideally just one. And just start getting busy.
Yeah. Oh, all right. So Brandon Leslie's in Metro Atlanta. All right. Salute. Me and Corey did an event in Atlanta a couple years ago for
What about Anthony?
Truth, young Truth.
And what up?
Ant, what's good? Oh, listen, yeah, Friday. We weren't on Friday. You know, we had some family business. You know what I'm saying? You know, so but we will be back this Friday. You know,
and we're gonna have fun.
Yes, yeah. Family business, Dunkin' Motor style and whatnot. Anyway,
Actually, we need to do a show behind the village on
I
family
mean,
business.
I'll be dropping some. People don't be getting some of my references, man. But it's all good though. You said do a show about family business, the books or the TV show?
Both.
Yo, I'm with that.
Because it's funny, I heard you say, you got BET Plus just to watch that on there. And I know we're not talking about trading right now, so
it's okay though. BET
but,
Plus. Listen.
So me and Jimmy both read, follow, watch Family Business. Mm-hmm. I enjoy the books way better than the show.
As do I.
But they are a source of entertainment and they're funny.
Yo, BET is funny too though, because every time I'm getting ready to BET Plus, every time I'm like, I'm gonna cancel this. They always drop something else, and it's like, all right, now I want to watch this. Like, it's always something they do drop it. It's like one thing, and I feel like they know they must be watching my algorithms. You know what I'm saying? Like, all right, here we go, boom, here goes something else for you. You know what I mean? But salute to them. Anyway, with that being said, though, so today we talk about volatility. I showed you guys how to follow a specific contract if you're using TradingView. So I hope you guys got some value out of that. We didn't get to El Richetto today as we were supposed to do on Friday. Anthony, make sure you're there this Friday, man, because we back and forth.
I was about to say.
And this Friday, we're gonna have a conversation about Can we even give the piece of art that is in reference?
No. Listen, the Nate gang will love this. That's all I'm gonna say.
But not the topic, Kamar. I'm just talking about the actual the source material that we're pulling this conversation from.
Nah. Okay. The Nate gang will love it though. The Nate gang will love it.
I'm gonna chill. All right, so that's what it is. So make sure you're here Friday, Anthony, because I'm saying we need you here Friday. We need Don here Friday. We need Nate Gang here Friday. But with that being said, though, this week, what's this week look like? This week, Stack Sats of Dodge Triumph she'll be in the village on either Tuesday or Wednesday before it hits the public airwaves. For those who don't know what that is my weekly Bitcoin podcast that I do on a Dolo. I mean, listen, I'll try to get my brother to join me. Y'all could join me for an episode or so. You know what I'm saying? But it's usually on the Dolo because I just cook it up.
Listen, I'm almost ready to drop the tax podcast. Almost ready.
We ain't no Kamari to drop a tax podcast. We're gonna put in the village too, though, man. Like how to stay out of tax prison is the name of the podcast.
That's not the name of the podcast, but we definitely will be talking about
how to stay out of tax jail.
Yeah,
how to stay out of tax jail. You know what I'm saying? Like, it's funny though because I jokingly say this, but it's a lot of truth in jokes, right? And I said this even at a live event. Like Kamari is like Batman. If you say tax a couple times and it's like a signal goes in the air and he shows up. But I actually love that. I love the fact that he makes everything about taxes. I could be telling him about, this restaurant was amazing, and somehow he'll turn that into a conversation about taxes, right?
Because everything's about taxes. This whole economy is about taxes.
I'm not saying that. I'm not arguing that.
This country was founded on taxation.
I'm not arguing any of that. I just find it funny how you do that, right? So even this past couple of weeks, right, when we saw that RICO charge that happened in California, and the first thing
no names.
I'm not naming no names because I'm not giving my opinion on it one way or the other, man. My opinion on the whole thing is this: don't do crime, folks. Don't do crime. That's all I'm gonna say is don't do crime. Crime does not pay. In 2025, crime does not pay. But unless you're in the politics. But I digress. Listen, here's what I'm saying.
I'm thinking about reviewing that, but I don't know
Let me finish my point.
Oh, go ahead.
When that whole story dropped, Kamari's first thought was, this is about taxes.
It's listed in all the articles.
Everything is about taxes. Everything is about environment. Like
extortion charges.
Me and Kamari are like in the same in that way. Like everything is about the thing that we have our expertise in. Like everything is about environment. Everything creates an environment, and everything in your environment is part of a stimuli, and everything is a response to stimuli. So that's how I look at everything.
And the piggyback off of that, right?
I get that. I just found this funny. I'm like, it's murder charges, it's conspiracy, it's racketeering, it's extortion. He was like, no, this is a tax. This is a tax story.
But who led the investigation? The IRS. The IRS led the investigation. So forget all the other shenanigans. The IRS said, oh, you're stealing taxpayer money.
But to your point, though, I look at everything as being a Bitcoin story, right? And not when I say Bitcoin, it's not specifically. See, when I say Bitcoin, people think I'm talking about the actual asset. But to me, Bitcoin is deeper than the asset. To me, Bitcoin is about broken money, right? So when I say Bitcoin, what I mean is broken money, because Bitcoin was created to be the solution to our system of broken money. So when I say that's a Bitcoin story, it's really about because if the money wasn't broken, a lot of things that happen that exist in poverty and that create these environments, that create these tax issues, they would never happen if the money wasn't broke. Broken money causes so many issues in our world that most of us aren't even aware of. Like a lot of the reason why people get up and this whole idea of hustle culture is really about the money being broke, because when your money is broke and you consistently lose value over a long period of time, I got to hustle just to survive. It's not enough for me to be a postman, right? Back in the day, I could be a postman, and it's going to sound funny. In our community, you could have been a postman and you could have raised 2 families, and a lot of them did. But because the money is broken, a postman can't raise 2 families in 2025.
Okay, Nate.
So a postman can't raise 1 family.
I'm going to do a
postman. I also do DoorDash.
Yo, you know how America was able to have where a postman could and have a regular job where you could have 2 families on one job? It's because of social programs that were put into place coming out of the Great Depression. Yep. They raised it between the social programs and the war allowed for the average salary to be able to raise a family and do all of those other things. And that continued up until 1973. What happened in 1973? Well, actually 1971. What? No.
Gold standard.
Bretton Woods.
The gold standard. The gold standard was changed. But you know why? It's because the Civil Rights Acts in 1964 pushed white people to say, we don't want to deal with black people having the same rights as us. And we would rather this country fail than to have everybody have the same rights. That's how Nixon got into office and was able to take America off the gold standard.
The other part about it is they was lying for so damn long. Other countries started saying like, yo, all this gold that you saying this money is backed by, like, let's see it. And it was like, how about this?
That was another thing.
No, but hold on. Let me finish my point though, because I also want to say this. I don't want to. This is no disrespect to postmen or men that have 2 families. I was just making a point. But go ahead though. I'm sorry. I just want to clarify that, because I don't want no postman in my inbox like, yo, why are you slandering postmen? Shout out to the postman.
No, but what I'm saying is the reason why you can't feed your family on one job anymore is because America would rather crumble into dust than give everybody the same rights. There's more to it than that. There's no nuance to that.
Yes, there is, Corey.
I can show you verifiably where this country has said that in the past. I can verify this.
No, listen, here's my thing though. I'm not disagreeing with you. Well, all I'm saying is you're talking about why it happened. I'm talking about the fact that it happened is broken money, right? So you're saying that this is the reason the money is broken. I'm saying that there is broken money. So we're not saying 2 different things. I'm just saying that our money is actually brought. By the way, that's an excellent book. The author's name is Lynn Alden, and the book is called Broken Money. And she actually goes into how our money is broken. She's teaches economics, but his economics book is called Broken Money. But the reason I say most things are Bitcoin stories is not specifically about Bitcoin. That's why, to me, Bitcoin is such an interesting topic that I'm able to create content week in and week out, because most things Bitcoin have really nothing to do with the asset Bitcoin. It's what Bitcoin represents, which is an attack against broken money. But I digress. This all started from Kamari and his taxes, and Kamari somehow wants to make this about taxes. So go ahead, Kamari.
No. I was going to talk about the gold standard because nobody ever mentions that when the U.S. was on the gold standard, the whole world was pegged off the U.S. dollar. So the whole world was pegged off of the U.S.'s gold reserve. That meant the U.S. had to have enough gold for the whole world to function. Nobody ever talks about that. And that is broken, to Jimmy's point.
No, it is broken, but she actually talks about that in the book. But what she also talks about is, like, if you read like articles and some memos that happened back then, countries started to question that, right? Yes. So that was true. But countries were like, do you actually have it? Right. So it's almost like we weren't even on the gold standard when we were in the gold standard, but everybody believed we had the gold. So everything was cool. It's almost like, listen, man, the older you get, the more you read, the more you study, you realize that all of life is a Ponzi scheme. Social Security is a Ponzi scheme. Our
Social
money's
Security is not a Ponzi scheme.
It is a Ponzi scheme,
It
dog.
is not.
It's all
It
a
is
Ponzi.
not.
Life is one big Ponzi scheme, man.
Okay.
We
All
all on a floating rock following these Ponzi schemes, and that's what life is, man. But
So, well, thank you all for watching the Black Wealth Rebel Show, the AKA Conspiracy Theory Show.
I ain't got my tin hat on, man. Yo, matter of fact,
aren't
I think I'm going to create another show for the village. I'm not going to put this on YouTube. I'm going to call it Jimmy's Tin Hat Show. Because if I really let loose on some of my tin hat theories, y'all might not show up no more.
Lord have mercy.
Y'all might not show up if I let my tin hat theories go.
Lord have mercy.
Anyway, man, listen, man, we love y'all. We appreciate y'all. For those that are in the village, we're going to drop another episode today with what we're looking at this upcoming week in the markets. So make sure to check that out. For those that are not in the village, I don't know what's wrong with you. You're being disrespectful to yourself and your ancestors. So go join the village by going to blackwealthrebels.com. Even if you join the free tier, we still appreciate the support. We want to move everybody there because these platforms are playing in our face and they disrespect us. YouTube is currently the ops. They still got the Buy the Hood page on suspension until May. They run our test us, but it's all good. We still out here working and we live in our raps. But go to blackwealthrebels.com. Also, I want to shout out our sister Felicia, man. I went to Felicia's 5th restaurant last night, and it was amazing, man. It's called The First Daughter's Oyster. Dog. It's 4th and Chestnut. Dog. I had the most, and this has nothing to do with finance, but I had the most amazing lamb chops I ever had in my life. They were blessed, highly favored. The lambs came from a 2-parent household with morals and standards. And I can tell that just by the taste that they were raised right. So I want to shout out Felicia. And for those who don't know, Felicia is the owner of Amina's Hospitality Group that has now 5. She's a sister too. She has 5 restaurants in the Philadelphia area: Amina's, Ivana's, Fia's. What's the other one? Black Hen, and First Daughter's Oysters. And she has Amina Ocean Joint coming too in West Philly. So that'd be like number 6. Like she's killing it right now. That's our sister.
We're changing your name.
I support my people, man. Listen, I know it's the first grade, so I support my people, man.
Your new name is Jimmy the Hood Critic, the Hood Food Critic. No, this is better. Jimmy the Hood Food. Damn it, Jimmy the Hood Foodie.
And the Hood Foodie. No. Listen, man, I support my folks, man. I love what she's building out there, so I want to give her a shout out. We talk about, Black Wealth Rebels. We talk about Black-owned businesses, and she's killing it. So salute to her.
Yes, she is.
Definitely talk about what we love more than what we hate.
Yes,
absolutely.
That's important. Absolutely. That's important. So, with that being said, though,
so when are we going to be behind the village talking about this week's plays?
Today. That's going to be out today.
What time? Because they can watch us if they're in the village live.
Oh, okay. Hey, listen, if y'all ready now, we could jump on right now and do a quick 15, 20 minutes. I mean, it's up to y'all too. I'm ready to jump on right this second. Right this second. So if y'all in the village, it's 11:25 now. Let's say 11:35. Pull up. Kamar, you okay with that?
If y'all cool with it, I'm cool with it.
All right, so it's 11:25, 11:35 for those that are in the village. We're gonna be right back streaming in the village. You know what I mean? For those that are in certain tiers, that is. Talking about the plays we're looking at this week in the markets. Other than that, we love y'all. We'll be back here next Sunday with another class. Wednesday is Wealthy Wednesdays. Friday is Freedom Fridays. Tuesday is Stack Stats to Die Trying. We also got other stuff dropping during the course of the week. So if you are in our village, there'll be content all in the course of the week. We're gonna keep y'all fed. And stay safe out there, y'all. I just want y'all to please stay safe. We love y'all and see y'all in 10 minutes. Peace.
Later.
Black Queen.